Hi everyone, it's Tom Gentile. Welcome to Tom's Trading Room. It's Friday, February 5th, 2016. Another TGIF as the labor statistics that came out today just continue to confuse Wall Street of whether or not we have a good economy, a bad economy, or a Goldilocks environment. And both bonds and stocks are reacting quite the opposite of what they were doing in the morning this Friday. So I want to talk about the stock market. I want to talk about the only company I'm interested in earnings in the coming week and the chart you see on the screen, which I want to end with. All right, so why does this chart look so good? What are all these green boxes having to do with this chart? And what can we do with this? I'm going to talk about that in just a few minutes. But let's first talk about what's going on with the market. So again, S&P 500, negative reaction to Friday, unemployment or employment report day, Labor Day. And so what's happening? We're getting a rise in volatility once again. I'm a little nervous because we are getting very, very close to some what I consider the key support, all right, for the last 2 weeks, which is around 188 on SPY. The other thing I want to show you is TLT as we look at the Treasuries ETF. Again, it has already broken above the last 2 weeks, and I'm concerned now that we might get above 129 and the spike, which is very close to 130. And this really shows you the foreign investment, not just the safety investment here, but the foreign investment coming out of government bonds in foreign countries and flowing into government bonds here in the States, which makes, again, not a lot of sense when you consider that we are in a tightening or at least a holding pattern for treasuries and treasury yields. All right. Next on the list is we're going to jump to gold, GLD. And GLD is a very interesting chart as well. Let me bring up the right chart here, GLD, and you can see here that gold continues to shine. And here's another one that no one seems to know why gold is moving higher, because gold is one of those areas of what we call areas of last resort. Okay, it's the currency of last resort. Maybe the reason gold is moving like it is, because it did start lower on the day Friday and started moving higher, is because of this ETF right here, UUP. All right, this is the double dollar index. And although the double dollar index did gap up after a big move down for the week, as you can see, we moved from near 26, about 25.90 within 4 trading days. We were down to touching 25. All right, so that's a pretty big move for the U.S. dollar, or double dollar index. Now, we did move a little higher today, but it still was not having an effect on commodities like gold. All right, finally, let's take a look at earnings for next week, and I am interested in Tesla. Tesla's the only thing I'm interested in next week. It's probably the biggest earnings announcement to come out next week. Earnings come out on the 10th after the market closes. I don't look at whether they beat expectations or they didn't beat expectations in the last quarters. What I look at is what has the price done, because right now the price of Tesla has been terrible. Let's just jump back for a second. I want to show you the stock chart of Tesla for the beginning of the year. TSLA is the stock symbol we're looking at, and if you take us back to January, all right, right in here, Tesla was trading at $240 a share on the 31st of December. Where have we been since? Pretty much straight down. In fact, a big move down into Friday afternoon as we crushed through 160, all right? And so we're down a good 80 points on Tesla. That is better than a 30% drop for this year. The other thing I want to let you know is that volatility is extremely high as we go into earnings next week. This is absolutely a seller's market. If you're a seller of option premium, this is what you want to look at next week. But let's take a look at, before we finish up the day, what does the stock do before and after earnings? So I type in Tesla, and I go to price, and I'm looking at best change before 4 earnings. Well, the best change before 4 earnings, if you look down here, is it averages of just under 2.5% before earnings. The problem is 3 of the last 4 quarters, that average has been to the negative. Well, maybe Tesla goes up after earnings. So let's take a look and see what Tesla has done for the last 4 quarters after the earnings announcement comes out. And I hate to say it, but this is another one where 3 of the last 4 quarters we were down, and the average move, that median move in Tesla, has been down about 9%. All right, 2 things I want to tell you before we leave. First, again, looking at this chart right here, I am going to be holding a special webinar for all of my followers, which is what we call the 2016 Energy Opportunities Report. All right, this will be held on Thursday of next week. You will get an invitation on Monday morning. First thing Monday morning, I'm going to have an email out to you with an invitation. The seating is limited, guys, all right? And these seats fill up fast. As we knew from my last webinar, we were full. A lot of people could not get in. So I'm going to get you the registration. Register as soon as you can. That'll be coming Monday. Also, everything you see here that I've been showing you is available right at our website, tomsoptiontools.com. And if you're not a member and you're new to us, check out our free trial. You can sign up today by clicking over here on the right-hand side at www.tomsoptiontools.com. Have a great weekend. Have a safe weekend. And I'll be talking to you Monday morning.